Hello everyone, and welcome to this presentation of a better way to buy low and sell high. So, I know everyone here in this room today has been taught from the very beginning that you want to buy something, a stock, a future, an index, whatever you're looking at a very inexpensive price, and we're all taught that we want to sell when the whatever we're trading, the tradable unit, is overextended. This is a perfect scenario. This is what we'd all like, but it's a little bit more difficult than it would appear. For example, let me share with you this chart here. Here's a chart in Apple. As you can see, this chart was coming from January, from the beginning of the year up until the end of April, coming into May last month. Apple was going pretty much straight up. It had a really nice gap up in the beginning of February and then continued to go higher, but it appears to be overextended. In fact, the stock has risen 25% of its value in just 4 months. So let's say you go to a blog or to a chat room and they say, you know, you should be selling this because after all, take some profits. You could be reaching a top here. All right. This is the way most people trade. They think something has gone up. It's too overextended. It's overbought. Well, I'm going to share with you a technique today that actually would have told you that in all fact, we were not overextended. We were actually undervalued right here. And this should have been a buy scenario for you before the stock went up even more throughout the month of May. So, today promises to be a great presentation. I want to welcome you all once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you haven't been able to find out by now, as you can just see, we are an educational company. We're simply here to mainly educate you so that you can be in charge of your own trading. It's our belief that the reason why 80% of all traders fail, it's been estimated, is because basically you're taking yourself out of the game. You're relying on someone or something else to tell you how to trade. In fact, I'd like you to look at yourself right now and ask yourself, how do you base your decisions off of? Do you go to a signal service? Do you subscribe to one? Do you go to a chat room or a trading room to find out what you're doing? Do you wait for the news events to come out and that's what's going to tell you? See, that's all based on what someone or something is telling you. And that's why the majority of most traders fail, in my opinion. Now, I've been trading for 40 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, specialist doesn't mean you were any more special than anyone else, but if you ever Google what a trading specialist was, they'll show you the pictures of the trading floors with all the people yelling and screaming and the paper on the floor. The specialists were those traders behind those large wooden podiums that made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular equity, you had to go to the trader who specialized, who made markets in that equity. That's what I did for a total of 9 years. I traded through the crash of 1987. I traded through the bull market that followed. So I've been in just about every market environment you can think of, and I've traded just about every strategy, every system, every technique you can think of. So after 4 decades of experience, I know what works in terms of consistency, and I know what doesn't. Sure, there are some things that will work for a couple of months, maybe a couple of years, and then they usually blow up. So I'm here to educate you so that you don't have to get involved in something that blows up. And what I found out in my 4 decades of trading is that what really sustains you is yourself. When you make your own decisions based on sound techniques and methodologies that have stood the test of time, that is what leads you onto that road to consistency. I know this from a fact because this is what has sustained me. I struggled my first couple of years tremendously. I did the same thing everyone else did, and I couldn't make a dime. I was lucky enough to have some mentors who taught me the same things that I teach to all of my students. So this is what we do. We educate you with all the things that have stood the test of time that I've accumulated in my 40 years of trading and that I continue to use on a daily basis. So today promises to be a really interesting and educational presentation. But before we begin, as always, we are required to show you this by law, so please take a moment to view our disclaimer. I'm going to show you a lot of charts, a ton of chart examples with this technique, a better way to buy low and sell high. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So once again, we're required by law to show you this. As you're taking a brief moment, I would also like to take this time to invite each and every one of you to follow us on Twitter. Excuse me. Feel free to follow us and write down our handle right there, abbreviation for Specialist Trading. I post something different on a daily basis, anywhere from little bits of wisdom I've accumulated to some of our signal generated, or I should say strategy generated signals. In fact, just last week, one of our strategies, actually two of our strategies, generated buy signals in the E-mini futures. So that would correlate to a rally in the markets. And as you can see, the markets went up very strongly this past week, and then you would have been out just a couple of days ago. So lots of great free information. Feel free to follow us on Twitter. Okay, so before we begin, once again, just let me reiterate. As you can see here, my goal is not to force feed you signals and tell you what the perfect market is, what the perfect time frame is. On a daily basis, I get emails from people saying, Steve, should I trade this market? Or what do you think about this time frame? Or what do you think about this direction? For some reason, we've been trained to get that answer from someone else. I know I was. What I want to do is put the power back in your hands so that you only ask one person, and that's yourself. What should I do here? And based off of what we educate you with, all the information, that's all you need to know. You just need to know the information, and then you can ask yourself based off of what you've studied and researched, and you'll know what the answer is. You'll know whether you should be long or short. You'll know whether this is a good market to trade or not. You'll know whether you should be trading this strategy. So as you can see here, my goal is not to force feed you signals. My goal is not to force feed you the perfect system. My goal is not to force feed you the perfect market to trade, but my goal is to simply teach you how to trade with the specialist edge. Now, this is the same edge that was taught to me. This is the same thing which I believe has been able to sustain my trading for 4 decades now. And hopefully, what I teach in all of our members around the world in over 110 countries and virtually every state in the United States, it will be able to sustain your trading, hopefully even longer than that. So, once again, this is going to be an educational presentation. But before we begin, I just want to state that because I'm going to be sharing with you a lot of slides and give you a lot of free information here, please kindly wait till the very end of class to ask any questions. We're a little bit different from other webinars in that if we wait till the very end, we'll be able to go over each and every one of your questions. But if we happen to, stop for every 5 minutes, then this hour presentation will turn into about a 5-hour presentation, okay? So remember, once again, kindly wait to the very end of the class to ask any questions, and I'll answer them all then, okay? The only question I will answer is the most common one, and that is this being recorded? Yes, it is. All of our webinars are recorded, so if you have to leave early, if you're having technical difficulties, many times if you exit and log back on, you will be able to see and hear everything clearly, but if you can't, Pro Trader Strategies will supply you with a great link to this recording, okay? All right, so why don't we begin? And let's start out with the first thing that we're always taught, all right? As traders, everyone is taught the same thing. I know I was. This was 40 years ago, but things haven't changed. And as you can see here, the first thing we're always taught as traders is to always buy undervalue and to always sell overvalue, okay? Now, there are a number of ways and different methods in which to do this, anywhere from technical indicators to actual news events, and I'll share with you a couple of them in just a few minutes. But what you're trying to do is something like this. As we look at this chart, a weekly chart now on Yahoo, we see obviously the stock had been coming down into the beginning of this past year, 2016. Now, let's say you follow technical analysis. Maybe there was a non-confirmation of that new low, okay? So it wasn't confirmed, or maybe the earnings are going to come out and they're going to be much better than expected. So you want to buy on this oversold condition, and you want to take advantage of that undervalue in Yahoo. And as you can see here, coming into this last month, the stock has gone all the way back up, making new highs, okay? And it works the other way. Let's say you were long IBM, okay? Coming into the beginning of this year in February, we're making new highs. Let's say you follow fundamental news, the PE ratios are not matching up, or even if your technical analysis is not lining up, maybe it's saying all the indicators are tremendously overbought. So you sell because you want to get out of something that's overvalued. And as you can see, IBM has gone straight down into this last month or so. This is the way it's supposed to work. These are ideal scenarios, but more often than not, this is the way it does work. And I say this from firsthand experience because everything that you're probably studying and trading based off of, I've already done, and I know what works in terms of consistency, and I know what doesn't. For example, if we look at this GWW daily chart here, now this stock is obviously oversold. Let's say you go to a chat room and they like it because the institutions are buying it, and you really want to get involved in this, and the earnings are going to come out tomorrow, and they're going to be really good. So you buy the stock thinking it's gone down far too quickly, far too low, and look what happens. The earnings come out, and they are good. but it goes lower. You don't get it. Good earnings, but the stock goes lower. Well, you think like, well, maybe it's an aberration. If it was oversold before, it's really got to be overextended now, right? And this is tremendous undervaluement in the stock, so you're going to buy some more, okay? And now you're going to be even making more money once this thing starts to make new highs, and then look what happens, okay? Look familiar to anybody. This is the way buying undervalued and selling overvalued usually works. It works until it doesn't work, and then we give everything back. But here's the good news. Well, first of all, I'm going to share with you how most people trade. I'm sorry, some more bad news, because support and resistance is one of the things I used to trade a lot with on the floor. And guess what? I couldn't find any consistency in it. Because when we looked at something like this, we'd see the standard support right here on these little stair steps up. So I'd place an order to buy right at the first level, and look what happened, okay? You're trying to buy low, but then it goes even lower. And the same thing would work with Fibonacci levels. Everyone uses those as support and Fibonacci, and they're magic numbers, and they're supposed to work. Well, it would work for a while. As we see here in this example, we have a downtrend, and we have the 50% retracement, so you would sell, and it works like a charm, okay? So now you step in. The next time it retraces 50%, you sell, but this time it goes higher. So as you can see, there's no consistency. There's no consistency in these methods. Sure, they will work every once in a while, but the times they don't work, you give everything back, just as you've just seen right here. And there are some traders who are able to make a very good living. I'm sure there's some classes, some courses, but they're very subjective. These traders are seeing something that the rest of us have a very difficult time in discerning. I know I did. I couldn't make heads or tails out of looking at support and resistance. Every time I found support, it was someone else's resistance. Same thing with Fibonacci, same thing with Elliott Wave. They're too subjective. So we need things that are more cut and dry, okay? So this brings us to today's class. There actually is a better way to buy low and sell high rather than simply relying on worn out methods and techniques that really show no signs of consistency. But there is something, and there are a couple of things I'm going to be sharing with you today that do have very high levels of consistency and that I continue to use on my personal trading on a daily basis. And these are the things I feel that have been able to sustain me. I'm going to share them with you right now. All right, let's go through a step-by-step process. And remember, if you joined us late, I'm going to share with you a lot of examples. But please, if you have any questions, kindly wait till the end of the presentation, just in about 20, 25 minutes from now, to ask any questions, and then we'll go over everything, okay? All right, here's the first step. Whenever trying to buy low and sell high, the first thing we want to do with our chart, whatever charting platform we have, whatever technique we're using, is we want to do step one, which is apply the buy-sell line, okay? I know a lot of you are saying like, okay, but what's the buy-sell line? I've never heard of that before. Is that some proprietary indicator I've got to buy? No, there's nothing you have to buy. You've heard me speak about this before. The buy-sell line is simply the 50-period simple moving average. Remember we talked about keeping things as simple as possible? Well, that's all this is. But before you look to buy low or sell high, you must have the 50-period simple moving average plotted on your chart. So I'm going to share with you all these examples on our new PTS Primo charts. As you can see here, this is our new platform I developed with Pro Trader Strategies. I'm really excited about it. And all these examples you're going to be seeing are taken from our PTS Primo charting platform. All right, here's an example in Facebook, okay? So the first thing you want to do is simply apply the 50-period simple moving average. And that's going to tell you whether you should be buying or selling. That's going to tell you whether something is too high or too low. Because if price is above the 50-period moving average, as you see here, we're only going to be a buyer. We don't care if we're going straight up, as we see here, or if we're going straight down. We're going to look for buying opportunities. In fact, this is where we want to take advantage of those buying opportunities. All right? But had you looked at this and said, boy, we're rolling over, this is overvalue, we've got to sell this, and you would be happy for a day or two, but then you'd give everything back. That's the way most traders trade. So we simply apply the 50-period, and you can do this right now, whatever charting software you're using, and it will tell you whether the overall trend is up and you should be buying, or whether the overall trend is down and you should be selling. It's that simple. Remember, trading is really simple. It's just ourselves, the traders, that make it more difficult than it has to be. There's no reason to, but for some reason we've been taught that the more complicated your strategy or system is, the more valid it will be. Well, I'm here to tell you, in my 40 years of trading, it's the exact opposite. The simpler your method is, the more valid it will be in terms of consistency. The more complicated it is, there are too many variables and requirements to be met, and it will keep you out of a lot of trades and you won't be that consistent. So you can start applying this right now if you like. Go back and look at your charts. In fact, I would dare you to go back and look at the last 10, 20 trades you've had. I can almost promise you that your losers were because you were buying below the 50 period and you were selling above. So go back and do the research, do due diligence on this particular indicator. You'll see that it is tremendously consistent. Does it work 100% of the time? Absolutely not, but nothing does. If you're coming to trading thinking that you want something that's a sure-proof bet, it doesn't work that way. Life doesn't work that way. You're looking for consistency. That's the best you can hope for, and that's what we offer in all of our courses and methods. Now, here's one of the best things that we have about the PTS Primo charts. We know that there are a lot of different ways to view the buy-sell line. We have more than just applying the 50-period simple moving average the way you see here. A lot of traders don't like to clutter up their charts, and they like to see different things which are more visual. So we've constructed, and it's only available on our PTS Primo charting platform, different ways in which to view it. So there's the color ribbon. So all you have to do is click on the buy sell line tab in the far left hand corner right here, and you're given different options. You can select color band ribbon, and if you see blue at the very bottom, that's telling you that the overall trend is up, and then you should only be looking to buy, regardless of what strategy you use. Okay? Now it's simply the 50-period moving average. It's when price is above or below. But that's how easy it is. So all you have to do is click on the color ribbon, and it will give you that. But we have other options as well. You can also go to the different variable, which is our fluid. I'm excited about this because this opens up a whole host of different opportunities. This is simply the 50-period moving average. With price above the 50, the background is blue. Once price goes below the 50, it's a reddish orange. So we like to use the old phrase that they used to use for sailors, blue sky at night, sailor's delight or trader's delight. Red sky in morning, trader take warning. So that's all you need to know what the color is, and then you know what side of the fence to be on. Now lastly, we're going to use our last option here, which is the standard background. This is the simplest of them all because all it does is it colors the background so that you automatically know just by seeing the background of the chart. If you have a blue background, you're a buyer, all right? It doesn't tell you where to buy. It doesn't tell you the exact entry. It doesn't tell you where to place your stop or exit. It just says that you should only be looking at the market from a buy point of view. Now, conversely, if this background were red, you would only be looking at the market from a seller's point of view. So you see how simple we've taken the workout. You automatically know what the overall trend is. This is only offered on our PTS Primo charts. Now, sure, you could apply the 50-period simple moving average, but this is so much more innovative, and it's just so subliminally right there for you with this color background and different options. So that's step one. Always apply the buy-sell line. Let's go now to step two. We're going to apply the PET D. This is another tool that we offer. This is something I was introduced to some 40 years ago on the floor of the Pacific Stock Exchange. Now, it's a proprietary color bar algorithm. It's based off of momentum. But what we do is we color the bars to tell you the short-term trend. Remember, we just told you how to find the overall trend, but now we're looking to find what the short-term trend is. So, as you can see here in this older chart of Aetna, sure, we're in an uptrend, and this is where most people decide to buy, right at the very top. And usually when they get in, that's the sign that it's over, okay? So is there any way we could have gotten in much earlier at the very beginning of the trend, and then once we saw that the trend started to dissipate and turn downward, we could have exited, holding on to some profits, and then been out of the trade altogether? Well, sure. You just click on the PET D. All you have to do is click on the PET D tab in our PTS Primo charts, and it automatically comes up for you. So do you see how all the bars were green prior to the nice upward move in Aetna? And you see how as early as the second or third bar, they started to turn red, giving you an early warning to either exit the trade entirely or to move your stop up. So this is a great tool for finding out what the short-term trend is. We take all the work out for you, and we just color code the bars. So now we know what the background is, what the overall trend is, and then the bars tell you, the color of the bars tell you what the short-term trend is. So here are the rules then that we really feel are going to add to your consistency and give you a better way in which to buy low and sell high. Here's the buy pattern. In an overall uptrend, meaning the back of the screen of your charting screen is blue, or price is above the 50 period, you're going to see a small amount of red bars appearing. Okay, this is when the PET D is applied. This simply represents undervalue. Okay, so this is what we're looking for, undervalue. It's not telling us that the trend is changing necessarily. It could be, but since the overall trend is still up, this is just a pullback. This is just undervalue at the moment. Now we're going to enter to buy one tick above the most recent red bar, because this will give us confirmation that we're going back up. You see, if we continue to get red bars going lower, 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 well, we'll continue to lower our entry point above each red bar. And then finally, if the back of the screen changes to red, well, guess what? We didn't risk anything. We didn't lose anything because we never entered the trade. And now we're in a sell mode. So all we have to do is sit back, cancel our order, and now look for ways to go short. Let me give an example here. All right, we're looking at Facebook again, all right? We've clicked on the buy sell line tab and we put on the background, so we know we're only going to be a buyer. Even though we had a nice sharp sell-off here, that's okay. We knew to still stay long if we were long, but much better to look for entry prices, okay? Now the second thing we want to do is add the PET D. So as you can see here, in our strategy tab, the green strategy tab, all our strategies and techniques, you would simply click on PET D and the bars change their color. All right, green for a short-term uptrend, red for short-term downtrend. Now, because the overall trend is still up by the blue background of the screen, this simply tells us here that this is not the beginning of a downtrend, it's just undervalued price in the stock. So this is where you want to buy. All right, this is not the beginning of a downtrend. This is undervalued. This is momentum that has just changed in an overall uptrend. So it's a very high probability way in which to enter. And we want to enter above the most recent bar, just above the high. So as you can see here, we would have entered right here, but we never traded above. So now, since the next outline of the bar is red, we place our entry there. And we would have had a very nice trade. As you can see, once we entered, look what happened. The stock went up next 6 points. So where more people were saying, well, you know what, the chat room I go to, the guy says that, the institutions really don't like this. They're really dumping the stock. Let's get out of this. I think it's gone up too much. We're looking to be a buyer because we're only listening to one thing. Not a guy in a trading room, not a guy on TV, not the earnings. We're listening to the chart in front of us. You see, I didn't start becoming consistent until I started just listening to the chart. I used to be in charge of making markets for 50 stocks. I knew what all the earnings estimations were. I knew what all the companies were based off of, who the CEOs were. I knew all the different support and resistance, the volume. I knew the institutions that were buyers and sellers. And guess what? It didn't make me a dime. It didn't generate any more consistency in my trading than anything else. So my mentors, who were specialists themselves, who have been trading about 40 years, said, Steve, we call this useless noise. There's no reason to look at this. If you're investing for the long haul, for 10, 20 years, sure, you need to know these things. But if you're buying and holding for a couple of weeks to maybe a couple of months, there's no reason. So don't, fill your trading with all this useless noise. Just listen to the only thing that's important. That's the chart. That's the source where your trades are coming from. It was very difficult for me to do it first, so I know it may be difficult for you, but after I let things go and I finally gave in because I wasn't making money my old way, that's when I started to become consistent. Now, let's look at another example here, but on the opposite side of the coin, let's look and see how you would sell. It's just the same thing, just turned upside down. In an overall downtrend, that means where the back of the screen is orange-red, where price is below the 50. You're going to see a small amount of green bars appearing. This is when the PET D is applied. This does not mean that there's a new trend change, that we're starting to go straight up. Sure, it could mean this, but most likely it means because the overall trend is still down, because price is still below the 50, it just represents overvalue. It just means we're overvalued at the moment, and most likely we're going to continue our downward trend. So the odds are telling us we're most likely going to be going lower, so we're going to enter to sell one tick below the most recent green bar. All right, so let's look and see what an example of this would be. Here's an example in Disney, all right? I'm sure someone was looking at this who used to trade the way I traded would say, well, Steve, I mean, I can't sell this. I mean, look at this, okay? We've sold off tremendously, gap down here, another gap down, where all of my indicators that I follow, all the oscillators, everything, the proprietary indicator I spent thousands of dollars is, it says that we're tremendously oversold. And look, we made a really good bottom here. All the institutions I track are buying this, and the guy in the chat room that I follow really likes this. So I can't sell this, all right? Did you see how all of my justifications were based on outside sources, on what someone or something is telling you what's going to happen? We only take our cue from what the market is telling us. And what does the market tell us? Well, if we apply the buy-sell line right here, as you can see in the top left-hand corner, simply click that on, select the option you want. In this case, it's the background. And guess what? The market is telling us, because it's below the 50, that its overall trend is down. There is no reason in the world you should consider buying it right now. Sure, it might change, but since the background is reddish orange, there's no reason to. Remember, red sky at morning, trader take warning. So we know now by listening to the market that we should only be selling this. Now let's go to step 2. Let's apply the PET D. So we go to this strategy tab here, click on PET D, and the colors of the bars change from deep red to lime green. So what does lime green tell us right here? That does not mean it's the beginning of a new uptrend, because we need to see the background change to blue. It's just telling us that that is overvalued at the moment. And that's a high probability area in which to sell. So we want to place orders to go short here. Remember, you could place options or simply watch if you're not a stock trader to go short. You can purchase puts. It doesn't matter how you enter. And you would have placed it right here. You would have gone short on this bar and 5 quick points down, making new lows in the next week. And if you missed that, well, guess what? There was another opportunity to go short here. Okay, so that's the basic gist of this particular method. Now let me show you a lot of more examples, more recent, so you can really get a good idea of how broadly this works and every market and different time frames as well. All right, here's that Apple chart we looked at earlier, okay? Now, obviously, Apple's been going straight up, okay? All we have to do is click on the buy-sell line to tell us if we had known as far back as here in December if we should have been a buyer, all right? So we click on the buy-sell line, select our option, and guess what? The buy-sell line, which is simply telling us what the market wants to do in the overall trend, was already telling us as far back as December of last year, 6 months ago, that we should be a buyer. There's no reason in the world to go short Apple, all right? So don't ever let anyone tell you that, boy, I don't know how I missed this. I wish I knew. Only the smart money knows how to do this. You have that access to your, right in front of you right now simply by applying a 50-period moving average. But we make it so much easier for you on the PTS Primo charts, because you see if the screen is background is blue, there's nothing you need to do. It's right there. All right, we go to step number 2. How could we have taken advantage of this starting back in December? We go to our second step, which is apply the PET D. Simply click that on, and now we see the colors change. Remember, if the overall trend is up, meaning the back of the screen is blue, we're looking for red bars, because this symbolizes and represents undervalue. This is where you want to buy low. So all you have to do is place your entry 1 or 2 ticks above the most recent red bar, and those are all your buy scenarios. And had you taken the very first one in January of 2017, well, you've gained just about 40 points coming into the middle of May. Now, we realize Apple has changed, but we just want to show you how simple it is. Apple is still setting up for another trade here. Let's look at FOSL, fossil. Okay, someone looking at this once again would say, Steve, boy, this is making a double, triple bottom. I really love this stock. It's tremendously oversold. I'm going to be a buyer of this because, the guy on TV that I watch every night really likes this. He likes the industry. He says that this is really undervalued. Once again, we don't care what anyone thinks. Take it from someone who used to do this 40 years ago. We used to, listen to television shows all the time, and we had subscriptions to newsletters. None of that worked for me, so why would you update it and listen to someone over the internet or someone on TV telling you exactly what to do? Remember, at Specialist Trading, we're an educational company. We're not telling you what stock to buy. We're not telling you where to enter. We're giving you information, and then we want you to apply it. We teach you how to do that, but we want you to make your own decisions, not us. Our goal is to teach you how to trade, not to trade for you, because a good mentor teaches you how to trade, but he does not trade for you. All right? That's why we don't have trade rooms or chat rooms, because that would turn into a crutch telling you what to do. We want to give you the information so that you make your own decisions. This is the only way you're going to become a consistent trader. Okay, so first thing we do, click on the buy sell line tab, and let's look and see what the background is. It's red. So we don't care what some guy is telling you that this is tremendously sold and undervalued, that you should buy it because the industry is going to skyrocket. Don't concern yourself with that. The market is below the 50, so it's telling you it's going lower. Second step is we apply the PET D. Now the PET D will change the color of the bars from dark red to lime green, and lime green represents all the overvalued areas. Because why is it overvalued? Because the overall trend is down. So we don't want to buy this at all. We want to sell at those overvalued areas right here, one tick below. So you had a good many chances to go short. And even though nothing much happened throughout the month of January, look what happened later on in February and March. The stock dropped 10 points. So the whole time the market was telling you, I want to go lower. I mean, why listen to anybody else? I'm telling you I want to go lower. Wouldn't you rather listen to the source than listen to some guy who thinks he knows it all? All right, let's look at Yahoo, okay? We see Yahoo's been going straight up, and then, very nice upward slope. And then right here in the second week of June, look at that really nice spike up, obviously off some news or something came out. Once again, I don't follow news. I've stopped following news over 35, 40 years ago, so I wouldn't know why this spiked up. All I needed to know was, what was the overall trend going all the way back to February in the far left-hand corner of the chart here? Well, guess what? There's no need to follow the news or follow what announcement was made, because we knew a full 4 months earlier that we should only be buying this. So why would you, do what most people do, is be a day late and a dollar short? You knew well in advance that this was a buy, okay? Not because some guy was recommending it, not because some website was recommending it, but because the market was recommending it, okay? So step number 2, we click on the PET D, and as you can see, look what happened here. We had 1, 2, 3, 4 different areas that you could have taken advantage of to go long. Now, if you've taken the first one, that was 10 points to your advantage, and as you can see, had you stayed long, you still would have been able to take advantage of this nice gap up here. Let's look at IBM. Obviously, IBM has been going much, much lower, okay? Someone would say, Steve, this has got to be, undervalued. You've got to be a buyer, Sure, I wouldn't have been a buyer here if I had known, but look how far low it's gone down, okay? Well, let's look and see what the market was telling us. Let's look and see what IBM was telling us way back in March of this year. Well, it was telling us you're right. It is time to go long. But what happened in the middle of March? The background changed. So before it really fell out of bed, you had plenty of warning to get out. And if you were more aggressive, you could have applied the PET D to look to go short right there, and then taken advantage of all the strong move to the downside. Obviously, some news or some announcement happened so that the stock gapped down in April and May. Did we know that? Absolutely not. All we knew was that we're trying to buy low and sell high. Here we were selling high. Remember, even if a stock is going sideways, you can still sell high. It has nothing to do with the price of the stock. When we sell high, we're selling high momentum. And the momentum is extremely high to the downside. So the lime green bars here were simply telling you that this is a very small shift in momentum, but it wasn't, meaning that it was changing the trend. All it was telling you that we were overvalued at that point, that you should really be selling that. And that was a nice 21 points to the downside. Now let's look at different time frames, because we know a lot of people don't just trade daily bars. So let's look at the QQQs, all right? That's the ETF for the NASDAQ index. You can trade those, or you can use them as a market timing tool. This is going all the way back to July 2016, just about a year ago. And the market had been rising, but it looked like it was going sideways. A lot of people perhaps were calling for some type of rolling top. But if you added the buy-sell line, nothing changes just because we're looking at a weekly bar. We were told by the market, the QQQs, that the overall trend is up. There's no reason to sell. Now, had you applied the PET D, look at all the buy opportunities you had. September, then another one in October, and another one in November to go long. If you were a long-term investor, or if you wanted to use this as a market timing tool, guess what? We've gone 25 points coming into May and June here, which represents hundreds, if not thousands of points in the NASDAQ. Now that's a weekly time frame to the upside. Here's a weekly time frame to the downside. UA, Under Armour. Obviously, this is going back from November of 2015. Obviously, this is a stock that you didn't want to be long at all, okay? Is there any way we could have known in advance not to be long this stock? No matter what some fund manager is telling you, no matter what the earnings are, no matter what the industry is saying, what is the market telling you? Well, you apply the buy-sell line, and in December of 2015, a year and a half ago, the background turned red. So we knew well back in advance when the price was roughly around 80 to exit this stock, that there's no reason you should be long. If you're going to be trading this, the only way you should be looking at this is from a shorting point of view. Buy long-term puts or some type of a strategy using options if you like. Now if we apply the PET D, well, guess what? Selling opportunity up here around $77, $80. Another one down here around 40, another one here at 28, all the way down. 60 points in the last year and a half. Was it because some guy did a great analysis of this stock and put it on TV or told you over the internet? No, we knew only by applying the buy-sell line. And you have that at your accessibility right now. Now, we know that some of our traders and students like to intraday trade stocks. So here's a 5-minute chart of Amazon this past week. Okay, we all know what happened to Amazon, their announcement that they bought out Whole Foods. Even I know that, even though I don't follow the news. It was all over the nightly news. But I don't look at that in any way, shape, or form for trading. It plays no importance in making my decisions. I only listen to one thing, and that's the market. So as you can see here, on a 5-minute time frame is Amazon. Coming into that news announcement, where was the buy-sell line? Well, a day prior to the news announcement, the buy-sell line was coloring the background blue. Blue sky at morning, okay, or I should say blue sky at night, traders delight. That means stocks are going higher, or prices are going higher. Great, but I still don't know where to get in. So let's apply the PET D. Well, we could have easily bought at 960, bought the calls, or bought them again at 964. And then look what happened the next day. All right, did the CEO of Amazon call me up and say, hey, Steve, why don't you buy the calls in Amazon because we're going to announce that we're buying Whole Foods tomorrow. All right, did anyone tell me the inside news? Absolutely not. Who told me to go long the day before? The market. The market tells you just about everything you need to know. But for some reason, we're never trained to listen to the market. We are always trained to listen to some guy on TV. We're always trained to listen to people in a chat room. We're always trained to listen to some convoluted indicator. Trust me, if there's one thing I've learned, listening to the market is a lot more consistent. And all our tools and methods and indicators do not predict what the market's going to do. They're not indicators like so many other canned indicators. They're simply translators. They just translate what the market is saying because it's hard for us to hear sometimes. Let's look at some other markets because we know not everyone trades stocks. So let's look at an hourly chart of the E-mini, okay? This is going back to about a month ago in May. Once again, we had a really nice run up to the upside, but now it looks like we're kind of stalling and it looks like we may roll over. Let's say there's some worry going on in the world. Maybe people think the market's going to fall out of bed. So you think this is about ready to go down. The E-mini futures are overvalued on an hourly time frame. And look what happens, okay? So just like most traders, you're on the wrong side. How could we have known to be on the right side? It's simple. Click on the buy-sell line, and we knew in advance, even when the market was going sideways to lower, that the overall trend was up. There's no reason to be selling anything. You should be looking for buy opportunities if the back of the screen is blue, if price is above the 50. Step number 2, is you add the pet D. That will simply tell you where the undervalue is at the moment. And as you can see here, right where those red bars are, displays and represents undervalue. It doesn't mean necessarily that the trend is changing. It means because the overall trend is still up, because the back of the screen is blue, that most likely these are buy opportunities. This is a chance to buy low. So you use the technique of placing your entry one tick above the most recent red bar, and you would have entered right here, and the next day it was 12 points to the upside, or $600 per contract. We had no idea why the market went up. We don't care. We're just jumping on board what the market wants to do. I always tell my students, trading is really simple. It's only ourselves that overcomplicate it. Your job as a trader is only twofold. You only have two jobs to do. The first one is listen to the market and decide what it wants to do, because it's telling you all the time what it wants to do. And then the second part of that scenario is job number two is just to jump on board. It's not to fight to market. It's not to pick a top. It's not to pick a bottom. It's to simply jump on board. If it wants to go higher, you want to be a buyer. If it wants to go lower, you want to be a seller. Let's go down to even smaller time frame. This was yesterday, a 10-minute chart in the E-mini. All right, we had a sharp sell-off yesterday afternoon. Okay, how did we know that? We add the buy-sell line roughly around 3:34 a.m. Pacific time, and as you can see in the overnight session, we knew prior to the market opening up regular session hours that we were going to be going lower because the overall trend was down. So all you have to do is add the pet D, and if you've taken that very first setup, as you can see here in the left-hand corner, well, you would have made about 14 points towards the end of the day, $700 per contract on a 10-minute chart. How about currency pair trading? Here's a daily chart of the euro dollar in May. Once again, we've had a nice run up, but it looks like we're rolling over. Someone could say, well, Steve, I'm a big candlestick guy, and look at this is a bearish engulfing pattern. This is textbook 101. You have to sell that. That's telling you that we most likely made a top, right? Once again, what's our credo? We listen to what the market wants to do. Sure, we may be making a top, but that bearish engulfing pattern would work much more consistently if the overall trend was down, if the back of the screen was red. Let's click on the buy-sell line, and you have a bearish engulfing pattern in an overall uptrend. The odds are it's not going to work. Markets are not going to go against the overall trend. The major tide is what's going to keep things in place, not the small ripples of waves that hit the shore. So the major tide is the overall trend. That's the back blue screen. So we're not going to take that, even though we had a couple of downward days, that's not going to really mean much to us. We want a really more consistent trade. So we know we're a buyer. We click on the pet D, and we see here that the down days represented undervalue. So we want to use those to buy, all right? This is not an opportunity to go short. This is an opportunity to buy. We use the technique I shared with you, buy 1 pip above the most recent red, right here, and look what happened. 300 pips coming into June. That's $3,000 roughly per contract. We have no idea why the euro dollar wanted to go up. We don't care. There's no reason why to figure out why. So many traders always want to know, well, why did it go up? Why should I do? Who cares? The market wants to do what it wants to do. Just jump on board. Here's an hourly chart of the Canadian dollar, okay? Just this past week, June 12th. It had a downward move, then kind of going sideways. A lot of people say, you know what? We've made a nice double, triple bottom here. It's looking at a nice base. There's some nice worldly news coming out in the Canadian dollar. I want to buy this. What does the buy-sell line tell us? It tells us that we should only be looking at the Canadian dollar on an hourly chart from a seller's point of view. So if we're going to be a seller, we click on the pet D, and now the lime green bars tell us all of the overvalue, where momentum has changed just for a little bit. And those are opportunities to sell. So rather than look on an hourly basis to go long the Canadian dollar, we're going to be a seller. We don't care what anybody says. We don't care what economic indicators came out. We don't care about that. And 265 pips to the downside in the next 2 days. All right, it's over $2,500 per contract. So let's recap before we go to question and answers. Today I taught you a simple but high probability method for buying low and selling high. And it's not based on anything you've ever been taught before. Because remember, we're all taught to look at news, to listen to indicators, to see what some guy's saying in a trading room, to see what the pundits say on TV every night. But that's not steeped in any type of consistency. The most important point you can remember is that overvalued has nothing to do with how high a stock is or how high anything you're trading is. Just as undervalued has nothing to do with how low whatever you're trading is. Those things are simply a shift in momentum, and that's all we're looking for. If the overall trend is down, we're looking for a small momentum shift to the upside to tell us to go short. If the overall trend is up, we're looking for simply a small shift in momentum that is going down. That's going to be our buy setup. That's where overvalued and undervalued come into play. They're simply shifts in momentum. They have nothing to do with how high or how low price is. Because prices can go as high as they want, they can go as low as they want. Remember Enron went down to zero? So it's silly to try and pick tops and bottoms. Take it from someone who tried to do that. I tried to pick a bottom during the crash of 1987. I was on the floor where the market fell over 500 points in one day. I know it doesn't seem like a lot now, but that would be comparable to over 3,000 points today in one day. Can you imagine if the market was down 3,000 or 4,000 points and you were trying to be a buyer? That's how silly it is to try and pick bottoms and pick tops. The market's going to do what it wants to do. Why are we always taught to swim upstream? It's a recipe for disaster. It's much better if you learn how to listen to the market and then simply jump on board with whatever it wants to do. The good news is that's what we teach at Pro Trader Strategies and Specialist Trading. So before we go into question and answer, I want to ask you a question. Do you think this edge could have helped your trading this past year? How about this past week? I know some of you are struggling right now with your trading. Do you think these two techniques could have helped you? Do you see how simple trading can be when you get rid of all the useless noise, is what my mentors call? Well, here's what we're going to offer all of our attendees today, just for attending and hopefully getting a lot of information out of this today. We're going to offer the Pet D, all right? This is our roadmap for any market. Doesn't matter if you trade stocks. I'm mainly focused on the stock market today, but remember, it can be applied for intraday trading of the futures. It can be applied for investing in stocks or currency pairs. It can be applied to commodities. Intraday trading, daily trading, weekly, monthly, it does not make a difference. It's a roadmap for any market. Now, this includes the add-ons. This is our proprietary algorithm that changes the colors of the bars. Okay, so regardless of what bar or what platform you're using, we provide you with the add-on that will change it for you. Now, the course comes with 2 continuation trading techniques as well as 2 pullback trading techniques and a trailing stop technique, all right? I just shared with you 1 technique today. We give you many more in the courses. This also comes with my personal email address. You can mentor with me anytime you like. You can correspond, ask me questions. Now, usually, if you just purchase the Primo Early Trend Detector, the Pet D, it costs you roughly about $4,000. I think even more than that. We're dropping the price down below $3,000, down to $29.95, and we know a lot of our students and people can't come up with that one lump sum, so we're also adding payment plans. So all you have to do is come up with a small deposit and you can be up and running. But we're not stopping there. We're also going to be throwing in the PTS Primo charts. All the slides you saw today were generated using our new platform. I'm really excited about this. I developed this with Pro Trader Strategies, my sister site, and it contains virtually all of our courses and all of our strategies and techniques. You saw our proprietary ones, the Pet D, as well as the background options for the buy-sell line. Also comes with numerous strategies and techniques and different ways in which to trade. Now, this is the trading educational portal you've been searching for. Here's the deal we're offering. We're going to be offering for that $29.95. We're also throwing in the PTS Primo charts. Now, this comes with the buy-sell line and all the different options, changing the back of your screen or simply adding the 50-period moving average if you like. It comes with our technique, the 25% closes. This is a great edge that is coming from the market, telling you the direction of what the market wants to do on a short-term time frame. We're also throwing in steps, not just one, but 2 different entry techniques. One is a pullback entry technique, one is a breakout entry technique that you can apply to any strategy or method you're currently using. And then lastly, the PET D. With that price, you're also going to get 3 months of real-time PTS Primo charts. Real time. So if you like to trade intraday or like to look at stocks unfold on a daily bar or monthly bar, it's all right there for you. That's all included in the price. Now all this usually comes at an extra value of $8.82. Well, we're not going to even charge you that. We're just going to keep the price at $29.95, and we're throwing all this in free. So you're getting all this free use of the PTS Primo charts for 3 months, because we know once you start using it, you're just going to be convinced this is so simple, so easy. As you can see here on the chart, we have our green strategy tab where every one of our strategies and techniques is right here. And I'm sorry, we can't offer you all those because those would be for our advanced traders, but we're throwing in the buy-sell line, the 25% closes, steps, these are entry techniques, 1 and 2, and the PET D, all right, plus 3 months of real-time PTS Primo charts. So here's how to take advantage of this. Remember, this is a roadmap for any market with 3 months of real-time charts plus mentoring correspondence with yours truly, because now you're a full-fledged student of mine, and anytime you have a question or something doesn't make sense or you don't understand something, you can contact me via email whenever you'd like. Here's how to take advantage of this, and to contact Pro Trader Strategies, you can either email them or call them directly, which what I would suggest, so you can set up a payment plan and you can come up with a small deposit and be up and running ASAP. Call them directly at area code 310-598-6677. Now you see this link at the very bottom. That's the link that takes you directly to the sign-up page, but it's not a live link. But if you go to your chat box on the far right-hand corner of the GoToWebinar column there, you'll see that a live link has been posted. So that is all you have to click on that will take you to the actual informational website and the sign-on page. But if you want to get a payment plan, which is actually something I would suggest, that way you don't have to put that large one lump sum down, contact Pro Trader Strategies. There's no obligation required. You can ask them some more questions about the PTS Primo charting platform, and you can call them directly. They have many trading consultants manning the phones right now at area code 310-598-6677. Now, I want to thank you for holding off. We have about 5 or 10 minutes for questions here. And I just wanted to say, I hope you got something out of this educational webinar. Remember, our goal is to supply traders with education so that you never have to ask someone, what do you think I should do? You know, what do you think of this stock? What should I do? What do you think of this market? Because when you do that, basically what you're telling the market is, I don't know how to trade. That's what you're really saying. I don't know what to do. In fact, I don't trust myself. So please give me the answers, because I don't know what I'm doing here. So I'll spend thousands and thousands of dollars for this guy to tell me what to do in a trading room or a perfect system or a chat room or buy the course. All of our courses and techniques are simply translators for the market. They're not systems that tell you how high or how low someone will go or how perfect it is. We're just trying to translate what the market does, and then we add some simple tools to help you enter and exit. That's about it, okay? Okay, so let me answer these questions here. Amika, hello. Amika is asking, Steve, can you show stretches of up and down flat charts of different markets to show what strategy 4 and PET D did in such situations? Well, Amika, unfortunately, we're not talking about strategy 4 today. We're only showing the PET D. So that would be something entirely different, but that's pretty much in the course, Amika. Remember, you know, we've all the information you need to know is in the course. And when the PET D is in a sideways market, as you've seen, basically the buy-sell line will keep you out of that. But if you see many times a lot of traders are saying, what happens when the PET D goes from red to green, red to green, red to green? Well, that's the market telling you that you're in a choppy area. So most likely you just want to stay out of that. You want to see and trade markets that we have a background that is full green, or I should say full blue or full orange. And then you want to see a solid color in the PET D. So those are the markets you should be focusing on. See, just because you may get a lot of whipsaw markets doesn't mean you have to trade them. And the PET D is a great tool to keep you out of that. When it's oscillating back and forth, well then that's the market telling you we're in a choppy market, probably best to be on the sidelines. TJ is asking, can you explain the 25% closes? Yes, that's a good question. We call this our top bottom 25%. What this does is it's a great tool. We have found that when the market has a propensity for closing in the top 25% of its range, It's an edge coming from the market, not coming from, some guy on TV or in a chat room, coming from the market telling you that it wants to go higher. Same thing when it closes in its bottom 25%. It's an edge telling you it wants to go lower. So what this does is you simply click on the top bottom 25% and instantly, depending on which one you click on, if you click on the top 25 or the bottom 25 tab in the drop-down menu, it will show you all the bars. Now the way this works is you want to see anywhere from 5 to 10 of the closes in a row. This tells you that a trend is just about to begin. It's a great, great tool, and you can apply any strategy to this, any method you're trading, and this will really get you in sync with what the market wants to do and give you an overall idea of what the short-term trend is. It's a great, great tool, and sure, anyone could look just off the chart and find out what the best closes are in the top or bottom 25% of their range. But on the PTS Primo charts, it's as simple as clicking on a tab and they all instantly appear. So you know instantly what the market is telling you. Remember, that's all we provide you with, tools to listen to the market, okay? James says, how is the U.S. oil chart saying? What is the USD oil chart saying? Well, James, you should know that by now. Remember, as a student of ours, you should never ask anyone what they think something is doing. You now, just off of today's free webinar, know that if price is above the 50, what is the market telling you? It's telling you it wants to go higher. And if it's below, it's telling you it wants to go lower. The reason why, in my opinion, in 40 years of trading, why most traders fail is because they're always asking someone, what do you think of this? What should I do here? Can you imagine a brain surgeon saying that in the middle of an operation? Well, what do you think I should do here, guys? How do I close this up? Or what's the next step in the operation? Or can you imagine an airline pilot saying that? Well, we're up in the air, we're up at 40,000 feet. What do you guys think I should do now? How do I fly this thing? That would seem silly, right? But traders do this on a daily basis. They say, what should I do? What do you think of this market? What we do at Pro Trader Strategies and Specialist Trading, what we do with our platform is provide you the information so that you never have to ask those questions. So right now you're asking me, what do I think of the U.S. oil chart? What's it saying? You should know that by now. If you've been in this presentation, you know that if price is above, it's telling you the overall trend is up. And if price is below, the overall trend is down. This is what we want to do. We want to make you in charge of your own trading destiny. We're not going to trade for you. We give you the tools and knowledge to make your own decisions. But as long as you want to rely on other people telling you what to do, in my opinion, that's a recipe for disaster. You'll never be a consistent trader. So go back, look at the U.S. oil chart, apply the 50, and then ask yourself, what is the oil chart telling me? Okay? You should be able to do that by now in this short presentation. Okay? Remember, a lot of people are asking, what is the deal again with the PTS charts? Well, that usually is a $900 deal to get all the information we're providing for you. We're throwing in 3 months of the buy-sell line that colors the screen in all those different options I shared with you. We're throwing in the top bottom 25%, which show you all the closes in the top or bottom 25%, which is a great tool showing you what the market wants to do. And we have videos explaining this as well that come with it. We have steps, which is our great fine-tuning entry for entering into the market. There are 2 entry techniques for entering into the market, and we're giving you the Pet D for $29.95. And then we're also throwing in the payment plan. I can't think of a better deal here because we're giving you 3 months of real-time data with these different techniques and tradable methods, and we're also giving you payment plans as well. Now we're not stopping there. We're also throwing in my guidance so you can contact me whenever you like for questions. But remember, the questions are there to be asked when you're trying to learn so that you can be in charge. I don't want people asking me questions like, Steve, tell me what I should buy today, or what do you like today? Because once again, that's not who we are. We're different from other websites because, if that's what works, then why are even higher, 85% of all traders losing money? Because you're relying on someone to tell you how to trade. It doesn't work. Take it from someone who did that. I tried to do that. My mentors taught me the correct way to trade, and I still wanted to piggyback off their trades, and they wouldn't allow me. I said, no, we've shared this information with you. You've got to decide based off the information and the knowledge you now have what you're buying and what you're selling. And it's the best thing that ever happened to me because I'm still here 40 years later trading on a daily basis. So this is what we're trying to do, instill the same knowledge so that you can be in control and so that you'll never have to ask, what do I do now? Okay? What do you think of this chart? You should only ask one person or one thing that, and that's the market in front of you. Okay, as we close here, I really strongly suggest that you contact Pro Trader Strategies, give them a call at the number or email them. You can set up a payment plan so that a small deposit you can be up and running and a student of mine, and you can get the PET D and, more importantly, the PTS Primo charts. We'll make this all 100 times simpler for you to use. It's right there. We made it so simple so that everything is just right there and it's a click away. So feel free to call them up, set up a payment plan, and I look forward to you becoming a student of mine. And we can be talking and corresponding on a daily basis. I want to thank you so much for attending today. I hope you got something out of this, and I wish you all the best of luck. And I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.